We are covering the essentials of commercial crime insurance for your property and casualty exam. A major focus on the exam is distinguishing between theft, burglary, and robbery, as these terms have very specific meanings in an insurance context. Theft is the broadest of these terms, meaning any act of stealing. Burglary and robbery are specific types of theft. The exam will test you on the details that separate them. Burglary is the taking of property from within a premises that is closed by a person unlawfully entering or leaving the premises. The key element here is that there must be visible signs of forced entry or exit. For example, if a thief breaks a window to enter a store after hours and steals computers, that's burglary. A common exam trap is a scenario where a person hides in a store until after it closes and then steals items. This is theft, but not burglary, because there was no forced entry. Robbery, on the other hand, is the unlawful taking of property from another person by force or threat of force. Think of a holdup at a bank or convenience store. The critical element is the person-to-person confrontation and the element of violence or fear. A good way to remember this for your exam is, burglary involves breaking into a building, while robbery involves a person. Beyond those core definitions, you need to know the key insuring agreements in a commercial crime policy. Employee dishonesty, sometimes called a fidelity bond, covers losses resulting from the fraudulent acts of an employee, like embezzlement or theft of money, securities, or other business property. Forgery or alteration coverage protects a business from losses sustained when an outside party forges or alters checks, drafts, or other financial instruments. An example would be a criminal stealing a company's mail, washing a check, and cashing it for a much larger amount. Computer fraud coverage is for losses resulting from the use of a computer to fraudulently transfer property from inside the premises to a person or place outside. Funds transfer fraud covers losses from fraudulent instructions sent to a financial institution to transfer funds from your account. The exam might test this with a scenario where a hacker impersonates a company executive via email and directs the accounting department to wire money to a fraudulent account. Finally, money and securities coverage protects against theft, disappearance, or destruction of money and securities from inside the business premises or a bank, or while in transit with a messenger or armored car. The key exam takeaway is to read the scenario carefully, identify the perpetrator, the property stolen, the location, and the method used. Was there forced entry? It's likely burglary. Was a person threatened? That points to robbery. Was it an employee stealing from the company? Look for employee dishonesty. Was a check altered? That's forgery or alteration. By breaking down the scenario, you can match it to the correct crime coverage. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.